Hey guys, this is my first blog video or vlog video. Vlog with a V. Anyways, I'm going to be doing these every couple weeks or once a month or something like that. I don't know yet, but just to kind of, share my thoughts on the market, share where we are, and, where we're going, what I'm seeing from my perspective, as a podcaster in the media side of the space. As a consultant, as an author, the people I talk to and the people that, I surround myself with, I get very interesting opinions. Some of them very pessimistic, some of them very optimistic. Some people that, hate this market and some people that are, super, super excited about where we're going. So I think it'd be cool to share my perspectives. I'm going to do it again, every couple weeks, once a month, something like that. So be sure to go down, like, subscribe if you haven't already. Share this with someone that might find it interesting, and hopefully some value comes out of it. So, expect these once, twice a month, something like that. Anyways, one thing I want to talk about today is Wyckoff theory and Wyckoff accumulation. And I think what has happened in this market over the last couple months to start 2023 and why it's going up so much in January and why that flip has been so evident. I think for a lot of people, that's a bit of a surprise given how ugly the market has been, where FTX has been driving this market down, and the effect of Celsius and Terra Luna back earlier in the year. Outside of a lot of those things, crypto was relatively fine, especially, leading into September and October. If it wasn't for some of these things that happened, it wasn't for FTX especially, maybe this would have happened sooner. But I think, the spring has always been very favorable for crypto. January and the start of the year has always been very beneficial. So I'm not overly surprised. I'm just surprised how quickly the sentiment has changed. And it makes me feel good. I think that we finally turned a corner. We hit a bottom in this bear market, and we're finally going to start moving in the right direction. As a trader, one of the things that you look at when you're trying to gauge a market is statistics and analytics, as well as different types of models that you can run to measure the market. One of the ones I like to use is called Wyckoff Accumulation. And especially when you're looking for long-term, bigger trends in the market, whether it's in Bitcoin, Ethereum, crypto overall, this has been very successfully proven multiple times, including back during the pandemic in 2020, where Bitcoin was at $5,000 and ran all the way up to its new all-time high of close to $70,000 in about a year and a half. So Wyckoff theory is actually getting applied again to the cryptocurrency market as of lately because of this period of time called Wyckoff accumulation that seems to have happened over the last few months of 2022. And now we're at a point where institutional investors and retail investors as well have now bought back into this asset class. And we're starting to see an optimism around potential appreciation or markup in the actual crypto assets and their value. So this is why you see Bitcoin running back up to 23,000. It'll probably sit, anywhere between 25 and 30,000 by the end of the year. At the low end, if things go really well, maybe we enter a full bull market cycle again, and you see Bitcoin, start approaching those all-time highs within the next year and a half or 2 years, kind of like it did back in 2020. This is a very similar situation for the cryptocurrency market as well. Crypto has always traditionally followed Bitcoin when it comes to actual price action. So I expect that to appreciate quite a bit in price as well. So expect leading blockchains like Ethereum, Polkadot, Algorand, Solana, and many others to do very well in the short period of time that we have during this, completion of an accumulation phase in Wyckoff. In 2023, I'm pretty optimistic. So other than the price action that I think we're all hoping for to, get us out of this bearish cycle that we've been in, I'm pretty confident that a lot of projects are going to start actually developing out the use cases that we want to see happen. And we're going to see those partnerships implemented for the first time, especially in the finance industry, where banking is now allowed to hold up to 2% in their reserves of crypto, where ISO 222 is about to be launched in the middle of this spring, around March, where you're going to have remittances and payments and, micro payments being managed by crypto protocols and crypto platforms. So overall, I think it's going to be a very positive year for the crypto market. And I see this being one of those years where we get back to a more comfortable pace. All the building that we did in 2022 and all the boots on the ground work to, keep this industry growing, despite where prices are at. Those things don't matter. What matters is what direction are we going and how do we keep developing from here? What I want to see is what NFTs can do in the future and what kind of utility they can have other than just representing JPEGs and artwork. I want to see what DIDs can do in terms of decentralized identifiers and creating decentralized IDs for people. I want to see where tokens can evolve to so that they can be used in the marketplace with businesses as loyalty points for memberships. I want to see where blockchain can be used in global supply chains, in the fashion market, in retail, in the food industry. There's a lot of applications that we've yet to see that are very easy to start implementing now, despite the rudimentary technology behind blockchain. So I think we're at a point where, for the first time in the short span of this market, which has been since, 2017, that we've really had a market come outside of Bitcoin and Ethereum, that we're going to see these real applications in life with use cases with major companies and corporations actually implementing them in various different ways.